Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that separates successful traders from the rest: market psychology. It's not just about charts and numbers. It's about understanding the human emotions that drive every single buy and sell decision. Have you ever felt that intense fear of missing out, jumping on a hot stock just as it hits its peak, only to watch it plummet moments later? Or maybe you've held on to a losing position way too long, hoping it would turn around, but it just kept dropping. If that sounds familiar, you're not alone. These experiences are classic examples of how powerful emotions like fear and greed can completely take over our trading decisions. Let's start with the big two: fear and greed. These are the twin forces that dominate the market. Greed is what fuels bubbles. It's that intoxicating feeling when a stock is soaring, and you think, "I've got to get in on this. It's going to the moon." This is the FOMO, the fear of missing out, that pushes prices to irrational highs. You see everyone else making money, and you want a piece of the action. So, you buy, often without doing proper research, purely based on hype and emotion. But what goes up, especially when driven by pure greed, must come down. And that's where fear kicks in. When the market turns, panic selling begins. The same people who bought at the top are now terrified of losing everything. They sell in a frenzy, which causes the price to crash even faster. This fear can be paralyzing. It can make you sell a good long-term investment during a temporary dip, or it can make you too scared to enter the market at all. Even when there are great opportunities, fear makes you think with your gut instead of your head. And in trading, that's a recipe for disaster. These emotions are magnified by something called herd behavior. Humans are social creatures. We're wired to follow the crowd because, historically, there's safety in numbers. In the market, this translates to buying when everyone else is buying, and selling when everyone else is selling. When you see a stock's price skyrocketing, and all the headlines are glowing, the pressure to join the herd is immense. It feels like the safe, smart thing to do. The problem is, the herd is often wrong. The crowd is usually most bullish at the market top and most bearish at the market bottom. By the time a trend is obvious to everyone, the smart money has often already moved on. True success in trading often comes from being able to think independently and go against the herd when your analysis tells you to. Now, let's talk about a crucial concept that many people don't fully grasp. Trading, especially in the short term, is largely a zero-sum game. What does that mean? For every winner, there has to be a loser. If you buy a stock and sell it for a profit, someone else had to buy it from you at that higher price. If you're profiting from a stock going down through short selling, someone else is on the other side of that trade, losing money as the price falls. This isn't like investing in a company for its long-term growth, where everyone can theoretically win as the company creates value. In the fast-paced world of trading, you are directly competing against other traders. And who are you competing against? You're up against sophisticated hedge funds, institutional investors with teams of analysts, and powerful algorithms that can execute trades in microseconds. These players don't trade based on feelings. They have strategies, discipline, and vast resources. They understand market psychology and actively use it to their advantage. They know that retail traders are often driven by fear and greed, and they exploit those emotional reactions. They might push a price up to create FOMO, encouraging the herd to buy in, and then they sell their positions to that same herd at the peak. They capitalize on the panic selling during a crash, buying up assets at a discount from terrified investors. This is why understanding the zero-sum nature of trading is so important. It forces you to realize that if you want to be on the winning side, you can't behave like the losing side. You can't let your emotions dictate your actions. When you feel that rush of greed or that pit of fear in your stomach, you need to recognize it for what it is: a biological response that has no place in your trading strategy. You are in a psychological battle, not just with the market, but with yourself. So, how do our emotions actually destroy our trading discipline? It happens in a few key ways. First, emotions lead to impulsive decisions. Greed makes you jump into trades without a plan. You might see a stock shooting up and buy it on a whim without defining your entry point, your profit target, or, most importantly, your stop loss. A stop loss is your safety net, the price at which you decide to cut your losses and get out. Trading without one is like walking a tightrope without a net. Fear can also make you act impulsively, causing you to panic sell at the first sign of a downturn, often locking in a loss right before the stock rebounds. Second, emotions cause us to break our own rules. Let's say you have a solid trading plan. You've decided you'll never risk more than 2% of your capital on a single trade. But then, you find a once-in-a-lifetime opportunity. Greed whispers in your ear, "This is it. You have to go all in." So you break your rule and risk 20%. If that trade goes against you, the loss is devastating. Similarly, fear can make you violate your plan. You might have a stop loss set, but as the price approaches it, you get scared of taking the loss. You move your stop loss lower, telling yourself, "It'll turn around." This is called hope trading, and it's how a small, manageable loss can turn into a catastrophic one. Discipline is the bedrock of successful trading. It means creating a set of rules and sticking to them, no matter what. It means having a plan for every single trade before you enter it. What are my entry and exit criteria? How much am I willing to risk? What is my profit target? A disciplined trader executes their plan like a machine, removing emotion from the equation. The market will do what it's going to do. You can't control it. The only thing you can control is your own behavior, your own entries, and your own exits. The path to becoming a disciplined trader is about building stubbornness. It starts with accepting that you are an emotional being and that these feelings will pop up. The goal isn't to eliminate emotions. That's impossible. The goal is to recognize them when they appear and not let them control your actions. When you feel FOMO, take a step back. Ask yourself, is this trade part of my strategy, or am I just chasing the hype? When you feel fear, review your plan. Is there a fundamental reason to sell, or am I just reacting to market noise? A great way to build this discipline is by keeping a trading journal. After every trade, win or lose, write down why you entered it, why you exited, and what emotions you were feeling at the time. Over time, you'll start to see patterns in your own behavior. You might notice that you tend to make your worst trades when you're feeling overconfident after a big win, or when you're trying to revenge trade to make back money after a loss. This journal becomes your personal coach, highlighting your psychological weaknesses so you can work on them. Ultimately, mastering market psychology is about shifting your mindset. Stop thinking about making a quick buck and start thinking about long-term consistency. Focus on the process, not the outcome of any single trade. A professional trader knows that losses are a part of the game. They treat them as a business expense, not a personal failure. Their goal is not to be right every time, but to have a system where their winners are bigger than their losers over the long run. They have the discipline to cut losses quickly and let winners run, which is the exact opposite of what our emotions of fear and greed tell us to do. So, the next time you're about to place a trade, take a deep breath. Acknowledge the emotional currents pulling at you, the greed, the fear, the urge to follow the herd. Then, turn to your strategy, your rules, and your discipline. That is your anchor in the stormy seas of the market. It's the only thing that will keep you safe and, ultimately, guide you toward consistent success. Thanks so much for watching today. If you found this helpful, please hit that like button and subscribe for more content on becoming a smarter, more disciplined trader. Let me know in the comments what your biggest psychological struggle is in the market. See you in the next video.